Hello and good evening, everybody. Hope you guys are having a wonderful week. Today, we will be analyzing the markets again. Join me every Tuesday and Thursday evening as we look through the markets of what has happened and what we think could happen. All right, I'm going to jump right into it. So, let's start as how we always start. Start by looking at um, just the heat map of the market and what has been happening today so far. So we can see quite different from Thursday. We see a lot of green across the board, which is good. Only a few red ones, and you have things like AT&T here, EA. A few small ones in here. The utilities are red. Energy still remains green. Right? Tech here. Some of them are flat today. Not necessarily a bad thing. Information, if communication services, green. Consumer discretionary, right? Payments and stuff, financial. Consumer staples are flat. So today was probably, we could probably say it's a breather, right? So the last week in the market, we were here, this level today, Tuesday, Monday, and today, these two candles, right? So it's a sigh of relief. But one thing we want to be concerned about is that on SPY, this is the daily chart on SPY, sort of looks like this bear flag, right? Bear flag looks like this, where, after a long streak of coming down, we find some support level here. We bounce back up. And now the question that lays in my mind is, are we going to use this 50 as a resistance, right? So 50 is sitting right around 450 to 455, that range, right? So we want to pay attention to how it behaves in this, because this year, unfortunately, we still have a lot of headwinds coming up. FOMC meeting in March. The one that we previously had didn't say anything bad per se, but I also didn't say anything good. It was just flat all across the board. The one in May, oh, not May, March. So March 14 here is FOMC meeting. And in there is when they say they would probably start increasing rates. So a rate increase would hurt the stock market. So that's one thing to pay attention to. So we do have a bit of time, right? So from here to here, right? This amount of time. What's helping today and yesterday's run was so a lot of mega techs were going into earnings, and their earnings are still pretty good. So that's what's keeping the stock market up. Today was we received a lot of good news. Google, AMD, they both have their earnings report today, which is really good. And it helped with the not Google. What does it say? Was that Google? I know for sure AMD had its earning report. Let me take a look. Let's take a look. So earnings report, this tab here, calendar, right? Move this down. So just earnings, right? So we have AMD, a big one. Yep, AMD, Google. So both of their earnings, right? And today, Google announced that it's probably gonna try to attempt a 20-for-1 split, which is great news, right? Meaning Google is gonna split, one share, every one share of Google now is gonna become 20 shares. So that's prompting people to start buying in hopes of the split in the future. It doesn't. It creates the illusion of more shares, but it just splits every share into 20 other ones. So more pieces to the puzzle. But that's good. Make it more affordable. So even though we are green now, I wouldn't necessarily just jump in blindly into the market. We have a few things that we want to be concerned about, and I spoke of this from before. Um, so, and whenever, if you've been following me for a while, I said whenever it's in between it's 200 and it's 50, this is a danger zone because here it could break out from any size. It could use the 50 as a resistance and then continue down this way, or it can bounce in between this range for a while, right? It can bounce in between this range for a while, and of course it could break up too. But when it's in its 50, most of the time I've noticed that it's gonna do for the immediate future, it's either gonna do these two things where it's gonna neither shoot down or just stay in this tight range. So, and as we go into FOMC in uh, March, we want to be very careful what we do. Um, if you're long term, you can start adding shares, right? Like I mentioned before, around this 200 right here is a good adding area, right? You add in and you continue to, um, if it goes down, you continue to add because you're in the market for anywhere between 5 to 10 years, so you're not so much worried about your returns just so yet, right? And you're taking advantage of everything. So every few weeks, few months, or something, you're looking back at the chart and you're adding something in, right? So along this timeline. So if it goes something like this, you're adding in, or if it goes something like that up here, you're still adding in, right? For short-term traders, I don't think we're out of the woods yet. We have been green for the last 3 days, but we're gonna be met with some resistance here. So my thinking is we probably could bounce down here, back and maybe see if this is real support here or if we're gonna break down. Right. So 430 support to look at long term. 450 resistance to watch out for. We're really close to. We're a little bit over that 450 mark, right? 450, 455, just to be sure, right? So let's dive down to the hourly on SPY. So the hourly, it's starting to show us something good, right? If you're a shorter term trader, you're going to pay attention to the hourly, the 4 hour, a little bit the daily, but it's not going to affect too much of your, right? So you're going to be looking at the hourly and lower time frames. But what I like to see before I start taking long positions is this 50 crossing the 200 to the upside, right? And when I see that is a signal for me to start looking for long positions, right? Short term long positions. So if I see it, as close to as 50 as possible, like right here, maybe setting a stop somewhere down here, right? Stop down here, and then trying to catch it for another swing up, right? So you see here the clear support here that we were there last week. First resistance that we were supposed to pay attention to, we broke through this. And now this is that. So the 450, right? 450 is right around this area. Right? But as we're going towards there, we got to pay attention to it. So, yeah, looking good so far, but I wouldn't consider it completely safe yet. But we'll never know for sure if we're 100% safe. It's always going to be taking a gamble in the markets, and then not so much a gamble, but calculated risk in the market. Setting your stop in case you're wrong, and just seeing how it goes. Right. So AMD today. Right. Again, it's peeking its head right above its 200. Right. Looking at the stock here, peeking its head right above the 200. right here. We're in between. We're going into that danger zone. 50. I call it the danger zone because we don't know. It's gonna give you a lot of fake outs, right? Fake up to the upside, or it stays in this range. Most likely it's gonna stay in this range, and then probably try to break down again. But we're gonna be there for a while, right? Um, so that's something to be careful of. And it had good earnings today. So AMD had good earnings today. Catapult this, diving down to the hourly. So it catapulted up. Definitely, it's gonna be something that the earnings are gonna be something that is gonna make this 50 cross over the 200. Right, signal for us to long. Google is gonna go to the moon. Not, I wouldn't say just yet. I would be kind of concerned. There's two things to be on the lookout for, right? It is a good thing that it's splitting, makes it more affordable for people. But the bad thing about Google doing a split is it's such a big split, right? Most of the splits that we've seen so far last year and the year before, and the megatechs, Tesla and Nvidia, were only a 5-for-1. Now, Google was already a big megatech company, and it's doing a 20-for-1 split, right? So, and also Google has three share classes, right? It has some A class, which is the symbol. I'll bring up the symbol here. G GOOGL, right? That's Google Class A. There's GOOG, that's Google Class C. And then Class B is just for insiders. So each one of these already has like, I think like 13 million or something outstanding share. Let's take a look at it. All right, analyzing fundamentals. Let's put it to a group. Okay. See if it'll load up. All right. So of course, it doesn't show. Let's see if this one shows. It's like something. Okay. So outstanding number of share. So there is 663 million outstanding shares, right? 663, right? Million times 20. Right, let me bring out my calculator. Right, 663 times 20. Right, so we're sitting about 13.2 billion market share, market outstanding number of shares. Split it, and that's between three. That's only for one of the stock group, right? And then if you go up all the way to three, that's a lot for Google. Somewhere in like the 40 billion outstanding shares. So it's gonna move like a turtle. That's one thing to be scared of. So a split could be a good thing, but it also makes it so that it's harder to move. Right? Could be a signal of it becoming more stable in price. Maybe eventually, maybe Google might start issuing dividends. Right? That might markets move from becoming from being just a growth stock to being like maybe a growth dividend stock, or just a value stock, right? But we don't know, right? Somewhere in there. So this is the thing to be careful of. All right, let's take a look at Apple. So Apple's doing really well. Right, last time we looked, it was down here, this level, right? But we see made its way above the 50 again. So as it goes to its 50, above its 50, good sign, right? Still relatively close, but you want to see it challenge this resistance over at 180. Right? As it challenges 180, we'll see what it does. Let's see if it gets close to 180. So a way to play it is play the breakout. So if you're thinking that it needs to break out above 180, maybe you set a buy stop order here, at 181 or something, right? And then you're setting a stop somewhere down here at 179 for the breakout. Or you can get it in now and you set a stop down here. But if you didn't get it down here, you probably already missed it, right? Or if you didn't catch it on Monday, it's probably with a little bit too much risk, not enough reward, right? Because it's sitting at 175 and a stop will be at 165. So it's about a $10 risk at the moment. But you guys get that idea, right? So Apple's doing good, right? It's bouncing up there, right? Down to the hourly. We see this cross, right? The 50 cross to 200. So we will be looking for a bounce, right? As if it catches, we can catch it as close to the 50 moving average as possible. That'll be our good entry spot for a long position, right? So that's what we're gonna look for. So, right somewhere in the 170. If you can get it close to 170, that'd be good, right? So, major resistance to look out for is 180 on Apple. Okay. Amazon. Now, Amazon had a pretty crazy day, but this range that I've been paying attention to, I'm questioning if it's going to use this range as resistance or if it's just a little fluke, right? Of people just kept following, so overextension, and it's going to go back into this range and back into this range, bounce in here, or try to break this right here. But let's see. What is it? Earning report for Amazon is on the 3rd. So 3rd is this. What is it? 3rd is Thursday. Yep, Thursday. So Thursday, we'll see earnings report. Hopefully, it puts it back into this range, and then we can trade this range back and forth, right? So you can see, right, all the way back into 2020. We've been just sitting in this range. So hopefully, this is just an overextension to the downside, and we can get back in this range and trade it for some more. So an overextension to the upside looks like this, right? So like this. Overextension to the downside looks like this. So this is not out of the ordinary, I would say. If it comes back in this range might still be good. So Amazon, good play. Okay. Let's take a look at Google chart. I know we looked at it, but we want to take a look at it again because it's probably going to be a pretty crazy play. I know 20-for-1 split. It is definitely presenting a lot of opportunities for anybody who does want it. Meaning, you buy 5 shares of Google, and come July 1st when it does. Well, not July 1st, July 15th. So if you have to be you have to be a holder of Google shares on July 1st to receive the split shares on July 15th, right? So that's the plan so far. But similar to the other tanks, right? It's sort of in this zone where I don't think it's gonna break out anytime soon. The 50 here and the 200, right? It's sitting in this right here, so I think it might be bouncing in between here, or we have a crazy day tomorrow that sets us up, and we continue bounce up here, right? And we continue to make a new trend, right? To the upside, we see the 50 moving, something like that, right? To the upside. Then what we have to pay attention to is this right here. It's 320 level, 3020, all-time highs, right? But That's what we will be paying attention to. But if it's in this zone of between the 50 and the 200, it's a really hard zone to play because you don't know if it's going to continue breaking to the upside or if it's going to just be a bounce using the 50 moving average as its resistance and bounce down. But with the good news, hopefully it projected forward. Like I mentioned before, the one concern is also the rates rising in March. So in March 14th, all the way out here. Out here. So we do play, right? Play here, or if it goes in here, or if it can continue going down, right? This is the wall, the date that we need to be careful of. A lot of volatility again, right, around those meetings. And one thing to be careful of is we have a lot of headwinds against us, rates increasing, inflation, the government moving out of the stock market because, they've been in it for so long. That for sure is going to hurt us as retail investors, retail traders. So be careful. Maybe take a lighter position, right? Instead of being fully vested, maybe take a lighter position so that you don't get hurt as they start making their moves and rates start increasing. Because you can always get in a little later when you know it's for sure it's safe. Right now, this year is a really cloudy year. We have had a really rough start to the year already. So it could get rough, more rough. Just be careful. Okay. A little cheap stock that we should look at. SoFi. Now, SoFi has potential. Even though I say it has potential, doesn't mean it's safe. Doesn't mean that you add in money and it's gonna go to the moon. Right? SoFi, like I mentioned before, it's one of those stocks where it has potential for the future. So maybe you throw in a little bit of money and consider that money gone until it becomes something. Right? Put a little money in it because right now shares are cheap. And for $1,000 you get, for $1,000 you can get a few hundred shares that you can hold for a while. And just think about it this way, those few hundred shares, even though it's not much, if the stock continue to do good in the future, they do splits and they continue to do splits, those few $100 maybe become thousands of shares in the future. So there is potential there. So think about the future. Somebody mentioned SoFi or Hood. I haven't really paid attention to Hood because so Hood is Robin Hood, if I believe. Of the two, I would rather stick with SoFi because SoFi, I don't know if SoFi they have like a stadium named after them and whatnot. And I don't know. I don't hear too many things that are completely crazy with SoFi yet. But Robinhood, they've been on the news. There's a lot of bad press around them. I know a lot of people use their platform, a lot of beginners, but overall, there's if you're gonna compare in the same network of stocks, I would still go with SoFi. SoFi, the pattern still looks a little better. Both of them look rough, but a little better than. But it comes down to preference, right? My preference is SoFi. Your preference might be Hood, right? Or if you can afford it, put money in both. You don't. These are little cheap stocks that you never know what could turn out of them, right? I don't know. Even though I talk about SoFi, I don't know if they're ever gonna make it, right? But if you have a little money in it, it goes back to that saying in NBA. You miss 100% of the shots that you don't take. So this is me taking a shot at SoFi. And if you have the money for it, you can take a shot at both of them, right? $1,000 into each of them and see how it does for the next 10 years or the next 20 years, right? $1,000 might be a lot of money for some, but some people they might not even blink about $1,000. So that that's something for you. I don't know, or at the moment, you don't even have to put $1,000. You put like a few $100, get a few shares, just hold it, right? Just extras, extra money that you have laying around, and see if it goes anywhere, right? It's all you need to do, right? So that's SoFi. Okay, I want time for one more, so let's look at one more. Uh, Another gambling stock is Palantir, right? Used to be a fan favorite for a lot of people. It's gone quiet to the wayside. It's really cheap again, right? So little stocks like this, when people are giving it, if I can get my pen working, when people are talking about it here, right, or even maybe in here, these peaks, this is not really the time to be buying them, because like SoFi and like Hood or even Roblox or any other meme relating stock, right? These you want to be buying these when nobody's really talking about them, because they're all categorized into that group. I would consider them gambling. They're small caps. People like to hype it up and then they go nowhere. Right. So when nobody's talking into it, you sneak it in here and you're throwing a few $100, maybe just gambling money into it and seeing what it does. That's all you're doing. Palantir. The thing that stands out about Palantir is that they are working with the government. They're providing a software service to the government, off the shelf that they can do whatever with. So you have that going for you, right? And when it's cheap like this, it's worth adding a few shares. I wouldn't necessarily make it a huge portion of your portfolio. Like the safer route to go is no more than 2% of your portfolio into this stock. If anything, just stick with like 1%, right? Have 1% into this uh, small stock and some stuff like SoFi and Hood, something that you want to gamble in. Have the majority of your portfolio in very solid stock like Google, right? Like AMD, Nvidia, Amazon. If you don't have anything else to put it in, throw in SPY. SPY is a bucket of 500 stocks, right? It includes Apple, Google, and whatever. So right. So we went over that. The market is turning to the green side. It seems to have found some short-term support. We were really wondering. I'm really wondering if we're gonna be continuing up or continue to go to the downside. But for the moment, we have taken a break and we've been bouncing. Vixx. All right. Let's take a look at Vixx too. Vixx has been dying. Right. Vixx is usually the thing to look at to know if it measures how many out of the money contracts are being bought, right? So out of the money contracts, people usually really buy those when they see a lot of volatility in the market, right? So that's one thing to pay attention to. It's really dying. You see here, the last few weeks, it was all the way up in the 32s, but it's since died down. So today, so if it continues dying down, we could probably count on the market going a little bit to the upside, or it's just staying flat overall. So the real question now is, are we going to stay flat, or if this is just going to be um, people paying cover so they covering their shorts so they can try to short it again when it's higher. That's the question on the mind. But all right, like that. Stay safe. Stay safe, trade safely, don't risk more than you can afford, and hope that everybody makes big gains with that. We're ending here. And remember, if you haven't joined, join our Discord group. And also, if you can, feel free to subscribe to my YouTube channel. And so you'll be alerted. Thank you, everybody. Have a good night.